Stock markets are on the rise once again. Optimism around the economic reopening that we are seeing around the world. Stores now beginning to open again. People starting to go back to work, and even signs that we are going to see borders reopening over the coming weeks, potentially allowing for some travel late on in the summer, some holidays, although it's obviously not quite clear just how much of a take-up there will be there. But this all creates a lot of promise. It allows businesses to get moved back to something that resembles a new normal, or at least an interim normal, until we do have a vaccine and a cure, which will enable people to go back to their ordinary everyday lives. Alongside that, we've also had news of a vaccine, another vaccine, which has now gone to human trial. There's no guarantee this will obviously work, but the fact that we are seeing a number of these vaccines are now going to human trials, some with more promising results, does give us hope that at least one of these will work, move on to mass production. And again, once we have a vaccine and a cure, that's when we can really start to go back to our everyday lives without fear of another widespread of the coronavirus and further lockdowns and further harm that comes with that as far as businesses and employment is concerned. Now, this is all very much benefiting the stock markets, which is unsurprising, especially when these stock markets are fueled also by enormous amounts of monetary stimulus. We look at something like the FTSE 100 here. The FTSE 100 did come off its highs briefly. It tested the 38.2% retracement, as you can see on the chart, on a couple of occasions, but that really did hold up quite well. And now it's that level above that's really starting to look quite interesting. We're back to testing the peaks here around 6,200. We broke back above 6,000 after numerous tests. And now we can start to potentially look higher. The next level above here, if we do see 6,200 break, which will be a substantial break, will be around the 6,500 mark. Now, again, this is historically, you can't see on this chart, but this is historically a very big level of support and resistance, and has been on a number of occasions. Again, if we break through that, we're getting really ahead of ourselves here, but that 7,000 barrier does look really interesting once again. But there's a number of key levels that we need to overcome before we start to talk about that. The important thing here is that it does look like momentum is building to the upside again. The old mantra goes, sell in May and go away. Well, this year's been a little bit different. That seems to obviously come earlier on in the year, which is likely to have an effect on normal trading environments. But May seems to be a bit of a stalling month. May seem to be a month when we start to see some bad news filtering through, when tensions between the US and China started to stoke up again, tensions around Hong Kong, obviously as well, which again is fueling further tension between the world's two largest economies, and potentially with others joining that as well. All of these things did seem to put a dampener on the market rally that we were seeing. But now we're seeing further reopenings, more vaccine news. This is being viewed as far more promising, putting those trade tensions, putting those tensions between the world's largest economies on the back burner and fueling another wave. So we had a bit of a stall in May, held off around that 6,000, 6,200 mark, but now we do seem to be gathering momentum. A break above 6,200 will just fuel further momentum again, and I think 6,500 could start to look very interesting around those levels.